Good morning, everyone. This is Amit Pabari, founder and managing director of CR Forex. In today's presentation, we are going to discuss two aspects. First, what is the outlook on US equity market, and second, what is the outlook on dollar rupee pair for coming days. So let me first start with US equity market update. On 2nd December 2024, we released a video saying that S&P 500 is going to face tough resistance near 6,200 kind of a level, and probably the first signal will come if it breaks 5,800 kind of a level, and right now it is trading near 5,800 kind of a level. So let us understand what is the outlook on US equity market. To understand the view of US equity market, we have to understand what is happening in US economy. In US economy, there are three challenges. First challenge is lower economic growth projection. Second, higher inflation expectation. And third, lower job openings. In USA, there is a bank called Federal Reserve Bank of Atlanta. They have released a data point of GDP expectation of first quarter of 2025. Whenever they are releasing the data point, it is based on real time basis, and it indicated that first quarter of GDP can go as low as minus 1.5% because of uncertainty and Trump policies with respect to tariffs. The second biggest concern for US economy is falling consumer sentiments. Consumers are expecting that their financial condition are going to get worsened in next 6 months. Consumer confidence level has been falling from last 3 months, and it is the highest single month fall since August 2021. Because of falling consumer sentiment, real purchases of consumers are also deteriorating, which will further decrease the GDP. Third problem in the US is consumers are expecting that inflation is going to rise drastically, and it is going to move towards 6% in next 12 months because of Trump tariff policies. So technically speaking, in USA, lower growth and higher inflation is the current scenario which lot of economists and consumer are expecting, which is technically called stagflation. Now let me show you the last chart. The chart is indicating that private job openings have been reducing drastically from last 1 year. With this, government have announced DOGE. Because of that, also lot of unemployment may rise. In short, all of these indicators are indicating that all is not well in US economy. Now let us discuss finally the outlook on S&P 500. When the economy is not performing well, equity market generally tends to give up. If you see the chart of S&P 500, which is currently trading near 5872 kind of a level, it might bounce back towards 6000 or 6100, but ultimately we are expecting whenever 5800 levels will break, the first target for the same is 5200, and if that is also broken, then we will initiate the call for 4950 kind of levels. Now let us discuss outlook on rupee. Generally, we have observed that global factors have greater influence on rupee momentum, but currently if you see on 13 January 2025, dollar index was trading near 110 kind of a level. From 110 kind of a level, it has come down towards 103.50 kind of a level. At that point of time, the dollar rupee pair was trading near 86.50, currently trading near 87.10 kind of a level. This clearly indicates that there is a divergence. Now it raises two questions. First, why there is a divergence, and second, what is the outlook on rupee? So let me answer the first question first. There is a divergence because of two reasons. First, FII have been selling in Indian equity and debt market since last 6 months. In last 2 months, they have sold close to $12 billion, which is creating pressure on rupee. Second reason is Indian banking system have been facing liquidity deficit problem. In the month of Feb 2025, we had a liquidity deficit close to 1.6 lakhs crore. Because of liquidity deficit, RBI was forced to do OMO and open market operation and buy sell swap, which also creates pressure on rupee. So now, whether the liquidity deficit problem is going to solve or whether the FII are going to come back to the Indian equity market or not, that only time will say. But in order to solve liquidity problem, which is currently deficit of 54,500 as on 5th March, RBI have announced again buy sell swap. They will be doing 11.5 billion dollars ka buy sell swap on 12 and 18, and then again 10 billion swap on 24th of March. With this, we are expecting that they are going to add liquidity into the system close to 1.8 lakhs crore. So in short, we can say that till the time FIIs are not coming into the Indian equity markets or liquidity deficit issue is not addressed completely, there will be pressure on rupee. With this, we can conclude that looking into global factors and Indian factors, 8680 is going to act as a very strong support for dollar rupee pair, and 87.50 is going to act as a strong resistance for the pair. So we can conclude that pair can consolidate between 8680 and 8750 for some more time. Now let us discuss strategy for exporters. Any uptick towards 87.25 to 87.45 levels should be used as an opportunity by exporter to increase their hedge ratio. Now let us discuss strategy for importers. As we are not expecting a runaway momentum in dollar rupee pair, so we are suggesting importers that they should not cover aggressively. They should only focus on near-term imports for 30 to 45 days. Any dip towards 86.85 to 86.95 levels should be taken as an opportunity to increase their hedge ratio. With this, I will end my today's presentation. Jai Hind, Namaskar. फिर मिलेंगे next week. Thank you.